FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome, and you are listening to, and perhaps even watching, the Financial Survival Network. I'm Kerry Lutz, and today is the 15th of September, 2020. We're midway through the month, and, well, what's going to happen next with the precious metals sector? That's the question. We kind of have an idea. We got a glimpse into it, but let's delve in a little bit further. For that, we got our good friend from tfmetalsreport.com, none other than Craig Hempke, a.k.a. Turd Ferguson. And write us with your thoughts where you see this bull market heading. We are in a bull. No question, the stocks have been performing stellarly the past couple of days while the market's been jerking around. Anyway, Craig, as always, it's great to have you back. So what say you about what's happening with metals? You said after Labor Day it was going to start going up. It has. It's been met with resistance. Some might think organized efforts of a certain cabal of international bankers who find some pleasure or find it necessary to suppress the price of gold.
Yeah, or profitable.
And profitable.
Yeah, but it's fun to watch them get squeezed. That's been part of what's been happening this year. And their whole pricing scheme is fracturing, you know, in what's taken place at the COMEX this year. Kerry, I was writing an article, a public article today, and I had to go back and add up all of the alleged deliveries that have taken place on the COMEX over the last 6 years. And, you know, the COMEX, because of what happened back in March and how it's now been kind of transitioned into a delivery vehicle where it never was before. COMEX this year, by the time we get through October and December, will probably deliver something like 800 metric tons of gold, which is just a huge amount. If you combine the previous 5 years, 15 through 19, it was about 650 metric tons combined. So we've got this huge demand coming, and I don't see how that's going to change given, you know, the monetary circumstances, the fiscal circumstances. And here's just one more nugget, Kerry. Again, this is part of what my research this morning. You know about, and most folks listening to us know about Warren Buffett kind of giving the tacit approval for holding gold and mining shares about a month ago, right? And that's kind of the key in some sense to kind of more widespread institutional ownership of gold. You know, I mean, you and I know the value of it and the reason why you should diversify into some physical metal and mining shares. But I mean, we are like 1/100th of 1% of the investing world, right? The big institutions, pension funds, hedge funds, and the like, they don't own any gold. There are hardly any at all. When someone like their bell cow, Warren Buffett's out there talking about, you know, getting out of some banking stocks and getting into a gold miner like Barrick, you know, that gets people's attention. One of the headlines that followed, and I think this was maybe right around the 1st of this month, was that the Ohio Police and Fire Pension Fund was going to move 5% of their assets into gold. Okay, this is just one little itty bitty pension fund. It's $16 billion that they have for the Ohio firefighters and police officers, but it's just $16 billion. It's just one little itty bitty pension fund. 5% of 16 billion is $800 million. I mean, that buys you, we'll make sure I get my math right. It was either 40,000 or 400,000 ounces of gold. It was a lot, okay? 12 metric tons of gold from just one little itty bitty pension fund. What, I mean, how, if that continues, I mean, that's quickly going to overwhelm the pricing scheme that the banks have been running now since 1975. And that's where we stand as we go into the latter part of this year and next. So it's certainly an exciting time to be in the metals.
Well, that's for sure. Well, I heard a rumor that Rick Rule had become an advisor to that pension fund.
Oh, really? Well, there you go.
Well, you got to wonder who their advisor is.
Right.
I'd like to
Right.
know who that guy is and how influential, or she is.
Well, and just think of how many, I get a $20 billion pension fund here and a $100 billion pension fund there, and if they all start moving 5%, I mean, there's just not that much gold in the world to be delivered out. And that's the problem these banks have. And that's apparently where we're headed. So this is great. We've had a great year. Could not have imagined COVID, obviously, in January, but I thought we'd get to at least 1,800 this year. And now we've already been to almost 2,100. And, we can talk about the Fed and what they may say tomorrow, but I think it's important for people to understand last year, okay, we could see this coming. We knew the Fed had tightened the screws too far, and we knew last year was going to be the breakout. And you and I spoke of this all through last year. I had a price target last year of 1520, even though price hadn't been above 1350 in 5 years. Well, we got to 1560 or so in late August, early September, and then pulled back and spent 90 days, at least all the way into about the 1st of December, kind of going sideways. And a lot of the perma bears were out there talking, oh yeah, gold's just going to go back to 1,200, all this kind of stuff. And then it got its act together and finished the year right at 1520, right back at the highs. So I don't know what's going to happen tomorrow, and we'll see, how the rest of this month goes. But this year's playing out a lot like last year. I mean, we got to nearly 2,100 on August the 6th. If we spend the next couple of months still kind of fiddling around here, building a base above the old all-time highs, and then finish the year back at 2,100, I mean, that'd be 30%. Let's see, we went from 1,500 to 2,100 to $600. Yeah, 40% for a gain this year. If silver finishes the year back near 30, that's 60%. And man, we'd be sure set to go for next year. So even if we just trace out like what we did last year, we're really in a strong position. And as I mentioned, this stuff about institutional ownership coming into not only the metals, but the shares makes you think that we're pretty early in the game.
For sure. And I want to remind you that we had a conversation right after the repo meltdown where we talked about pretty much this very scenario that we're seeing now unfolding. I think the two are intimately tied together. I keep going back to it because it was the most staid market in the world. It's like the market for baseball cards. Well, that's a little more speculative, but baseball cards never go down. The repo market never fails, except in key times like in 08 and 09. And there's been a couple of other times during wars where it's gotten out of hand. But to me, that was the clarion call that things were changing fast, and we were building up to it, no doubt, because repo is all about repurchasing treasury debt and other AAA rated government debt. And when you got like so much of the stuff and you got everybody betting on it and hypothecating it, this is what happens.
Yeah. Yeah, you're swapping your treasuries and other collateral for cash because you don't have cash. And the Fed had drained so much cash between 13 and 18 that they created this problem. And now it's clear they have no way out. They have to just keep the pedal to the metal. The spigot's turned on full bore. I don't know how many more metaphors can I give you? But there's no going back.
I'm tired of them. Don't worry.
And that's exactly what Powell has told us so far. We've been waiting all summer. There were these hints that a major policy change was coming. And they started talking about this in July, and all these trial balloons were floating. A lot of folks thought that policy change was going to get announced at this particular Fed meeting that's been convened, that's happening right now as we speak and concludes on Wednesday. That policy change, was going to involve letting inflation run hot and basically just another way of Powell telling everybody that they're not hiking rates like forever. At least until 2023. You don't believe me? Okay, then we're going to change our inflation targets. I'm doing everything I can to convince you that we're not raising rates until at least 2023. And so anyway, rather than wait for this Fed meeting, Powell instead used that annual Jackson Hole meeting that was held online this year to announce that policy change. So now we know that. So what are they talking about now at this FOMC? They may not be talking about anything. That Powell pretends to be so apolitical with his purple tie every time that maybe they don't want to jack around with, really saying anything because this is the last meeting before the election. So we'll see what's coming though next. What was a part of all of those trial balloons that were floated over the summer was this change of inflation policy, but coupled with what's called yield curve control, where the Fed says we will not allow the rate, say on the all-important 10-year Treasury note, to exceed, 1%, the 0.75%, whatever they decide is the upper boundary, and that the Fed will act to buy bonds or buy futures or whatever if rates ever get to that boundary and drive them back down. Once that's announced, if you're just like, let's call it a layperson, someone who's not like fully committed to the precious metals like you and I are, if you're just like a regular guy, gal, listening to this, and you want to know when is it safe, to go full bore into the mining shares, you got to make sure you're in the metals. Well, all those signs are currently there, but when the Fed announces this yield curve control stuff, whether it's tomorrow or whether it's at the meeting in December, that's your sign. That's your sign. That's when it's just pedal to the metal, man. And it may be tomorrow. We'll see. Yeah,
well, it's interesting to see. They kind of got to be a little careful here with the election and such. They've got to kind of appear to be neutral, regardless
right.
if they might be or not.
Right.
And they need to step back.
Well, and Kerry, what do they do? If they say they announce this yield curve control thing, institutionalizing negative inflation-adjusted returns on treasuries, stock market's going to soar. Because that's what's been driving it since March. Then they're going to be, then it's, well, you're only doing, look, they only announced this because they want to make sure Trump, there's going to be those people to say that. Okay, so if they don't say anything, if they just sit there and fiddle, blah, 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 and the stock market tanks because all of a sudden, or they try to say, well, we're not going to be buying as many bonds, now because COVID's looking better or something, and the stock market tanks. Oh, the Fed is trying to get Trump thrown out, the Fed. So Powell's got kind of a narrow band, a narrow plank he's got to walk tomorrow. It'll be interesting to see how he does it.
Yes, it will. And I can't wait to see one way or the other. Well, maybe they'll manage to keep a lid on things till after. We've got some employment numbers coming up. But the reality is they got to keep printing. There's no way out of this.
Right.
Right.
And, and he knows too, as you and I know, even with Trump as president and the Republicans in control of the Senate, the deficit is still exploded. It's still going to be $3 trillion this year. And there's no going back. I'm stunned they haven't done, CARES 2 or whatever they call the stimulus thing. It's an election year. The politicians are out there to buy votes with your money. So the fact they haven't already done this and it's September the 15th is amazing. Powell may just be sitting there. He discusses frequently that he knows there are limits to monetary policy. There's limits to what the Fed can do. He might want to hold back this yield curve control to wait to see how the election turns out, because he's got to know if we're already at $3 trillion, with Trump as president and a split Congress, oh my gosh, if some of these pollsters are right and Biden wins and the Democrats take control of the Congress, what's it going to be next year? $8 trillion? With their Green New Deal and all the other jazz. And he's going to have some way to try to mute the impact of all that. So he may hold off on this, yield curve control or any other steps and announcements until December, until, we know what the election result is.
So in the meantime, the stock market, interesting here. It's pretty much, we had like 2 days of a decline and then boom, it's off again.
Yeah.
Right?
Yeah.
Today it's back up.
Yep. Yeah, well, and I get asked that a lot. I get guys in my golf group seem to ask me that every weekend. How's the stock market go up when, the economy's in the tank and all that stuff? I said, well, when the Fed creates $3 trillion from nothing, which they've done because they've monetized all the net treasury issuance so far this year. Some of that's going to leach out, through the banks and into the stock market. And then when the whole thing is driven basically by 10 stocks, you just get money to flow to those 10 and suddenly, you know, the S&P's up on the year. So that's kind of how it works.
Yeah, well, kind of obvious where things are heading. And many of you out there haven't wanted to accept the fact, but it's where we're going here.
Yeah.
There's no turning back. I mean, what can stop this?
They can't. Right. I mean, they can't. You mentioned it. I mean, they tried to tighten the screws, you know, in this charade they played for 5 years from 13 to 18 about, oh, we're going to draw the balance sheet back down to the $1 trillion that we started at, you know, and rates are going to go back to 5 or 6%, you know, normal and all that. It was all lies. But they were trying to maintain that lie by just cranking down the balance sheet a little bit at a time. And what they sold off like $700 billion worth of treasuries and mortgage-backed securities over 5 years. And then boom, I mean, they put that $700 billion back on like in 5 months. And now they've expanded it by $3 trillion in the last 8 months. And so, yeah, there ain't no going back, man. No, I even think, man, even the most ardent, you know, dollar supporting stockbroker has to understand at this point that there's no going back to those days.
Okay, well, two things. So we've seen copper go over $3 a pound, 310 roughly. Haven't looked at it today. And we see housing like going through the roof here.
Yeah,
no
lumber.
Big time. I mean, like never before. Is that just a function of rates, or is it people know that the money's going to become worthless, so buy a house and put it back in greatly depreciated dollars? Is the general public that savvy about inflationary expectations?
Maybe. You know, I think too, though, something like copper is really closely tied to the dollar. You know, and since QE to infinity started in March, dollar's down about 10%, the dollar index, you know, which just simply measures a dollar versus other fiat like the euro and the yen. And so that's part of what's going on behind copper. And then I've read stories about China stockpiling commodities like copper. For whatever reason, maybe they think they can get them on the cheap here and they're converting their dollars into hard assets. And then you've got people fixing up their homes, and that's driven lumber prices up 2 or 3-fold over the last 6 months. All of that ultimately is inflationary. And I really think this is where we're headed, Kerry. I mean, it's not, you know, not 15% inflation like the late 70s, but maybe 5%. And, you know, in the late 70s, interest rates were at 10%. And so your inflation adjusted return was negative 5%. You made 10% interest on your CD or your treasury bond, but inflation was 15. So your purchasing power, you're losing 5% a year. Well, if inflation now in the next couple of years goes to 5% and rates are held at 1 or 0 by the Fed, well, you've got the same negative 5% inflation adjusted return again. You know, it's the same math. And so that was, you know, the 70s were a period of stagflation, kind of a stagnant economy with inflation. And again, I think that's where we're headed now after the damage that's been done due to COVID. It's going to be a long road back. And, you know, if we get into a period like that, like the 70s, folks can look that up. I mean, the price of gold went from $100 to $900 in about 4 years. So we could very easily do something similar in the years to come.
Yeah. And then, you know, they're talking about the Great Reset.
Yeah.
Think that's coming?
Some point. You know, I learned a long time ago to never say, yes, it's coming and it's coming on Halloween. The old stockbroker adage is that you never want to give date and price in the same sentence. You know, It's one thing to say, I think Walmart's going to 50. It's something entirely different to say, I think Walmart's going to 50 by Thanksgiving, right? Mm-hmm. So to say you can say the big reset is coming because, again, history for millennia is full of examples of monetary systems moving to just complete fiat, you know, paper, phony, baloney money, and then having to completely snap and then go back to some type of sound money and start all over again. What we don't know is when that snap comes. I've made the mistake of thinking, you know, that might have been in 2010, and here we are 10 years later. Yeah, so you just don't know. But a moment will come, whether it is a reset voluntary or a reset that's forced. At some point, the adage I just was using in an interview this morning is it's like a rubber band. Eventually the rubber band's going to snap as longer you pull on it. You just don't know how far you can pull before it finally goes. It might be a lot longer than you think. I mean, we'll see, but it's coming. Something like that's going to happen.
Very true. Couldn't agree with you more. Well, appreciate you coming on, Craig, and go over to tfmetalsreport.com and just tell us what's there for us, Craig.
Oh, my pleasure, my friend. I'm really proud of the site. It's almost 10 years now, Kerry.
Same here, man. Same here.
Jeez. We were young. We were back in college back then when we started, weren't we? Yeah, we were young guys. And look at us now, for God's sake.
A lot more hair, man. A lot.
Look, God, where'd it go? I got all these wrinkles. Anyway, it's been 10 years. The sites, I couldn't be more proud of what it's become and the people there. Look, we're all in the same boat. You, me, everybody listening to us. And those are the people on TF Metals Report. I write a report every morning and I record a podcast every afternoon. In between, the whole community kind of interacts with each other and talks mining shares and links they found, but what's going on around the world. And I just think it's a great resource. There's a fee to play along. It's $15 a month, 50 cents a day. Maybe it'd be a better way to look at it. But I think it's money well spent, and people just come check us out, tfmetalsreport.com. Hey,
at this rate, it's a half ounce of silver.
Yeah, right. Well, and people think, well, what do I get? That's one of the things we get for it. I mean, I'm looking at the price every day. If you figure you're buying a sleeve of Eagles every month, 20 of them, if I can save you $1, by, utilizing the analysis and, buying at $1 cheaper than maybe you would have a week earlier, well, that saves you $20, so you can justify it in a number of ways. But I think just the information alone justifies it. And this is just, look, your channel, all kinds of other analysts out there are trying to educate people as best they can for what's coming. And I mean, that's all people can do, because the regular media is not going to do it for you.
Oh, we know that. Yeah. They've totally abdicated their role to inform you, to explain things to you, to connect the dots. I wrote an article a while ago called Disconnecting the Dots. And that's what the media's purpose is now, to point to any event that might be taking place and let you know that it's not related to anything else that's just happening in a vacuum.
Right.
And they really need the service.
And Kerry, I mean, if we're related to a political sense, I mean, everybody knows MSNBC and CNN just simply pump the Democrats, in the anti-Trump line. And then you've got Fox News that likes to, that's always been more conservative, taking that angle. And you don't really get anybody that just straight reports things anymore. Well, in the financial media, they all pump the financial stuff. I mean, they know where their bread's buttered. They're not going to go on there and talk about, how the hedge funds operate and how these institutions, and the big banks operate and stuff like that. They're going to give the news from that slant, promoting that system because they want to keep their lights on as long as possible. And so, again, things like what you do are just so extremely important. And I'm grateful that you do it. I'm sure all your listeners feel the same way.
And likewise, my friend. And really, when you look at it, there is an outfit out there called the Epic Times. They're primarily concerned with China, but they do present a lot of U.S. news without the filter. So, but outside of them, very few. A lot of alt sites, but it's harder to find them now, harder and harder. All right, well, just go over to tfmetalsreport.com, sign up for Craig's service. You will be happy that you did it. It will more than pay for itself. And send us your email, kl@kerrylutz.com, with any questions. And while you're at it, go over to financialsurvivalnetwork.com/contest, and you might just win a half ounce of gold. You sign up there. We got one more day left. I extended it, and you'll be able to go till the 17th. Anyway, Craig, always a pleasure. Thanks for coming on.
You bet, Kerry. Good to see you.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.